Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 20th of December. What a complete disaster for the FTSE over the last few sessions. No interest rate cut, obviously, because the Bank of England can't at the moment. And breaking below the 200-day line there at 81.85, breaking below the floor of that rising trend channel from the end of September last year at 8100, and below that looking and hoping that support will come in either at the November support area just below 8,000, or even worse, the August low there near 79.15, so really not set fair at all. 50-day line falling as well, so we'll probably go across down between the 50-day line and the 200-day moving average, 81.80 over the next week or so. Obviously holidays, etc. getting in the way there, but over the next week or so. And the chance obviously of a full rollover for this market back down to the 7,800 or 7,700 level if everything goes wrong. But I suppose the greatest chance here is that we would just bounce between 7,900 and 8,000, and that would save the day. But difficult to see how there'll be any upside here unless we get back above 8,100 and back inside that rising 2023 channel. The other saving grace at the moment, or a saving grace, is the way that the RSI is at 31, so very near the oversold 30 level. And if you look historically, you can see that most times in the recent past, i.e. in November and back in January last year, when the RSI gets down near 30, that is a buying opportunity. We had one of those back in October last year as well. So hopefully a rebound between 7,900 and 8,000 is on its way. Moving on to the DAX, which was a star performer until a couple of days ago, and now it's not so much. Here we had a bull trap island top there with the gapping up and gapping down, and we've gapped down again, so heading rapidly towards the 50-day moving average there at 19,500, and the floor of the rising trend channel from basically the turn of the year near 19,300. That would be our favorite level for the market, or favored level for the market to bounce at. But as you can see, the RSI is still 43, so we could even stretch back down to the November support there at 18,800, or even the 200-day moving average, which came in to rescue this market back in August. End of day close above today's highs. What we need is a minimum trigger rather for a change of near-term trend, so above 19,800, but at the moment not looking good at all. On to the Dow, which gave us an old-style meltdown type of day earlier in the week. Some attempt at recovery yesterday, but the fact that the recovery was below the top of the gap there and that mid-November support 42,900 means that while we're below 42,900, we are looking for the November support there at 41,600, and the RSI at 29, so we are overbought, but there's a wiggle room of a day or two potentially in terms of turning that around, and especially given the way that we fell so far on Thursday after many days of downside price action suggests that this is looking like a little bit of a painful move at the moment. This stage only back above 43,000, really negating the breakdown and the top that we've had so far. Moving on to Bitcoin, where we'll see whether it has been able to be a store of value at the moment. It's actually just echoed what we've seen in the equity market. So the top there towards 108,000, and then back now down to the 50-day line, call it 92,000. RSI still at 42, so there's still the risk of heading back down to 85,000, which was support on the way up. So basically below 95, the risk of 85,000 for Bitcoin. And that bearish divergence that we saw, the higher highs or the record high that we had last week with a equal RSI peak there, was a decent signal in terms of a potential breakdown there. Moving on to gold, and here we'll see whether it's risk off as well, and it is risk off in the sense that after the double top there at 27.50, we've gapped down after fading at the 50-day line, 26.80. Risk now of a move down to the 25.20 area, which is that support line projection from back in September, and can't actually rule out now with the gap down that we've had a move down to the 200-day moving average at 24.80. We haven't been below the 200-day line for a long time now. I think it's probably basically we haven't been below it this year, so that's quite an achievement, and therefore there is a chance that having avoided that for so long, maybe early 2025 is when this market will go there. RSI at 40, so still plenty of gas in the tank for the bears at the moment, in the sense that RSI 30 is a potential rebound point. Moving on to the stocks, and a decent deal, or a well-received deal from Ascent Resources today, and here you can see that it's helped the share price. We'd already gapped up actually the other week, the week before last, and so interesting that maybe one or two people guessed that there was a decent deal on its way, which sometimes happens in the market. It's amazing, really. Neckline resistance there at 2 pence. We'd like to see the market stay at or above the 200-day moving average, rather, at 1.9. Above that, best case scenario target as high as 3.4 pence. By the end of next month. Obviously, that looks like a punchy call at the moment, but let's see if the market can at least stay above that 200-day line after the signal that we had, the gap signal to the upside last week. Moving on to Bay Capital, which has stolen the old British Airways epic code, but here you can see that we've got a rising 50-day line. We've broken the recent resistance of the key reversal up day that we had on the 18th, and basically the longer we stay above 4.5p, the greater the chance of move to 8 pence by the end of next month at the top of that broadening triangle from back in April. Ideally, we stay above the 4.5 pence zone. Moving on to Enwell, which has got an interesting chart at the moment. We had that rather horrible rug pull basically last month, but we gapped up and we've held that gap. The gap top there at 16 pence and above recent support at 18 pence, looking for the next level up, which is 26 pence by the end of next month. Maybe it'll be a bit sooner than that. The other positive at the moment, apart from having probably stopped out or flushed out all the bulls below 16 pence, is that the 50 and 200-day lines are both rising. That suggests that the next time they cross will be a golden cross, and that could be a helpful boost for the share price. But 28 or 26 to 27 pence while we're above the 18 pence zone. On to Fusion Antibodies, which has basically delivered on the upside here. We had an initial target there at the red line, 4.8 pence. Second target was 7 pence, and above 7 pence, looking for a fresh leg to the upside, which I will try and extract, and that is up to just over 9.1 pence, and looking for that by the end of next month. This looks like a mid-move consolidation and a breakout in the making, and obviously an end-of-day close above 7.25 pence would signal that. Ideally, we stay above 6 pence recent support in the meantime. I've covered GSTechnologies multiple times, and it seems to have delivered on the upside. We had unfilled gaps to the upside in the recent past. The last one, top of the gap there, 1.47. Above that, we're looking for a retest of the best levels of this month at 2 pence, and maybe that can happen by the end of this month. Rather obscure selection next in the form of Haydale, but the shares have gapped off the low after a long time in the wilderness. That may be significant. Bear trap gap reversal above 0.11, above that, and the floor of the gap looking for up to 0.16 by the end of next month, although it's difficult to work out what might do that on a fundamental point of view. On to OPG, which is gapped up after its recent rug pull. Shares gapped down last month, and the gap up now suggests that we've got a bear trap iron reversal, which could give the shares at least enough momentum to take them back up to 7.2 pence by the end of next month, while they're above the floor of the gap there, near 5 pence. Covered Surface Transforms quite a few times in the recent past, and shares are slowly obeying the order of trying to go up, but here you can see this is a falling trend channel, but we are bouncing at and above a now rising 50-day moving average. I call that sideways shuffle, and above the 50-day line there at 0.26, looking for up to 0.75 by the end of next month. Obviously, the main barrier to the upside, recent double top resistance at 0.46 pence, so we need to clear that. Bit of deal making at Tiger Royalties, which has been well received so far. You can see the shares have broken The recent resistance, December resistance at 0.21. The initial target here, the 200-day line at 0.16, but if everything takes off and people start to appreciate the latest deal, I think into the tech space, then or adding to the remit of the company's investments, we've got 0.28 as a potential 2 to 3 month target there, especially while we're above 0.12. A couple of stocks which are looking good at the moment. One is Valereum, and here you can see that we've got this rising trend channel. Been looking for 18 pence for quite some time, looking for that by the end of next month, while we're above recent broken resistance at 13 pence, and so that's a decent win, especially given the way that there have been at least 3 or 4 bounces for the RSI at or above neutral 50. Finishing off with Zenith, which had its $9.7 million win announced yesterday, one of its arbitration results, and here we've hit the target we were looking for, around 2.4 pence. We were looking for that even before the arbitration result came in, because it looked as though there was going to be, or there was, a bear trap island reversal signal. Bear trap is derived by the island reversal derived by the gap down that we had in August and the gap higher that we had at the beginning of October. That's worked. The initial target 2.3 to 2.4 pence. Second target now up to as high as 3.9 pence by the end of next month. Ideally, we stay on the right side of 2 pence, which was resistance on the way down. That's it for me today. More updates over the weekend.